A founder walks into a pitch meeting. He's smiling. Revenue is up. Customers are paying. And finally, he's profitable. He thinks this is the moment everything clicks. Instead, the investors lose interest. No follow-up. No term sheet. Nothing. Why? Because profit was the problem. Put yourself in that room. You did what every business book tells you to do. Make more than you spend. You proved the model works. So why does the room go cold? Because you're solving the wrong problem. There are two games in business. One is about making money. The other is about becoming unavoidable. Most founders think they're the same game. They're not. When you say it, we're profitable, investors hear something very different. They hear, you stopped pushing. You chose efficiency over expansion. You protected margins instead of chasing the market. They don't see strength. They see a ceiling. Because in venture capital, they're not buying your present. They're buying your potential to dominate. Look at Amazon. For years, they could have shown profit. They chose not to. Every dollar went back into growth. Warehouses, shipping, infrastructure. It looked reckless, but it built something competitors couldn't catch. Now think about Uber. Losing money on rides, burning cash globally. On paper. Broken. But investors kept writing checks. Because they weren't betting on rides. They were betting on this. If Uber becomes the default everywhere, then the economics can be fixed later. If it doesn't, nothing else matters anyway. That's the bet, not profit. Dominance. Now here's where founders get trapped. Profit feels like proof. Growth feels like success. But both can lie. You can be profitable because you're not investing enough. You can be growing while losing money on every user. So the real question is brutal. If you took your foot off the gas, would this business still work? If the answer is no, you don't have a company. You have a temporary illusion. The moment you take venture capital, you make a trade. You give up control for a shot at scale. Profit gives you control. You decide the pace. You survive on your terms. Growth gives you speed. But speed comes with pressure, expectations, burn rate. No room to play small. And here's the part nobody says clearly. If you build a small, profitable company, you win, but your investors lose. So no. Investors don't hate profit. They hate what it can represent. A decision to stop short, to play it safe, to build something that works, but never wins. Because in this game, the real failure isn't losing money. It's realizing too late. You built something that was never meant to be big,